Now today, to start with, we are already aware of the fact that there is a portal on which everything is done online for GST. So whether it is registration or it is filing of returns or it is raising any queries or raising any objections as well as notices and MIS report given to the government, everything is online. So next concept in the first chapter is about common portal. Now this common portal facilitates everything about GST being done online. This is about registration, returns, matching, objections, MIS to government. For everything there is a common portal, so everything is to be done online. Almost there is nothing which is done now physically. So this is another feature of the introduction of GST in India, right? Now friends, I am coming to the most important thing which is relevant to understand, that is about the applicability of GST. How and where does it apply? Applicability this is in two parts, for goods and for services. In case of goods, number one, doesn't apply on alcohol for human consumption. It doesn't apply at all. In future also it will not be covered therein. Number two, for the time being, not applicable to petro products. Sooner or later these petro products are also going to be covered in GST. When we say petro products, we are talking about diesel, petrol, air turbine fuel, crude and natural gas. 5 things. Number 3 applies on all other goods unless exempted. Now, subject to exemption, GST is applicable on all the goods. Exemption, say for example, vegetables, raw agro produce. These are basic examples which are exempt, right? So here I am just writing example for reference. These are raw agro produce. This is just one example. This is not the end of the exemption. There are many more exemptions available. So first thing is, as far as goods are concerned, it doesn't apply on alcohol for human consumption. Number 2, for the time being it is not applicable. For the time being not applicable to the petro products, and petro products are diesel, petrol, crude oil, natural gas as well as air turbine fuel, and all other goods are covered unless those are exempted. Okay. As far as services are concerned, In services again, number one, activities referred in Schedule 3 activities referred in Schedule 3 are not considered as service. So first we have to understand what is there in Schedule 3, but that is not the topic at this point of time. Number 2, central government is empowered to allow exemptions so those exemptions are also 80 plus. More than 80 exemptions are there in relation to services where the concept of GST does not apply. And now subject to these two, so subject to above, all services are subject to GST. Okay, now I hope you understand about this. As far as goods are concerned, composition scheme is available for all the goods. As far as services are concerned, in case of services, only supply of food and beverages, or in nutshell you can say restaurants and hotels, those are eligible for composition. Otherwise composition scheme is not available. So that I am adding it toward the end here. So I need a space, so I need to clear this. And by chance if you have not taken the note of this, just pause, just press the pause button, take a note, and then you can continue. I'm just removing this. Okay, here for the goods subject to eligibility, every supplier can avail composition scheme. Subject to eligibility, this is based on turnover during the preceding financial year, and during the current financial year also this is limited to a certain figure. Those figures will refer later on. Okay, so as far as goods are concerned, if a supplier is eligible, he can always avail composition scheme, and this scheme is available again up to the limit specified by the government. In case of services also, composition scheme is available only for supply of food and beverages. Composition scheme is available only for supply of food and beverages, right? So what is important is only for, right? In other words, you can say that except this case, service provider is not eligible for composition scheme. A repetition of something we did in the first video: if the person is under composition scheme here or here, during composition there is no input tax credit, and when the composition scheme ends, because the turnover exceeds, the person will be eligible to avail credit as on that day, right? So here again we can add something more. Maybe it is a repetition, but continuous repetition helps you to remember forever. During composition, there is no input tax credit. Okay, so this is about the applicability of GST, and if you understand this, it will help you to understand entire GST in the coming pages. Okay, now herefrom we move further, and now we come to the specifically the constitution, provisions in the Constitution of India pertaining to GST. Okay, because that is again something very, very important in the chapter number 1. Now this is a tax, and Article 265 says no tax can be levied and collected unless it is authorized by law. No tax can be levied and collected unless it is authorized by law. So we can put a heading, provisions in Constitution of India. Right? Something about the Constitution we already discussed in the first video, that prior to GST, what was the position about the levy of tax on the goods and services. Okay, so here we have Article 265. In Constitution we don't have section, these are article, and this is Article 265, and this simply says no tax can be levied and collected unless authorized by law. Article 265 says no tax can be levied and collected unless it is authorized by law. So there has to be a law, and where the government is authorized to make the laws, that is Article 245 and 246. So now coming to Article 245. So Article 245 authorizes central government and state government to make laws. Right? Now central government can make law by way of approval from the parliament for whole country, and in a given situation this law may have applicability even outside India as well. Right? So for example you can say FEMA. Now FEMA is one law which applies to a person resident in India even when he is not in India. So that may have extraterritorial application as well. Right? But as far as state government is concerned, this is only for whole or part of a state. Right? So Article 265 says no tax can be levied and collected unless it is authorized by law. Article 245 says central government, state government can make law. And then in continuation we have Article 246. This is authorizing the government central government, state government to levy tax. So now you have three articles. Article 265, this says no tax unless authorized by law. Article 245 is authorizing the government to make the laws. Article 246 is authorizing the government to levy and collect tax. Right. So now the government is authorized to make the laws for levy and collection of tax on which subjects? For that, refer schedule number 7 of the Constitution of India. Whatever is listed in the union list, central government can make law. Whatever is listed in the state list, the state government can make law. Whatever is there in the concurrent list, state government as well as central government both can make law on those subjects. Right. Now, certain amendments have been brought in by Constitution Amendment Act 101 Amendment Act 2016. The major amendment is Article 246A. Article 246A, this has been introduced in the Parliament with the object of bringing in GST. And this is authorizing the government to levy tax. Right. So now coming to Article 246A. Article 246A. This is about GST. And this article says state government and central government. State government, this is having exclusive right to collect tax on intrastate supplies, and this is SGST. Central government, this is having two rights. This is on intrastate as well as interstate supplies. On intrastate supplies, it will charge CGST. On interstate, it will charge IGST. So state government will not have any right to collect tax on interstate supplies. So that is, state government does not have any right to collect GST on interstate supplies. Right. Now, why the central government is collecting the tax? Friends, this tax is a destination based tax. Whatever IGST is collected by the central government on interstate supplies, 50% of that will be given to the state where the goods or services are being supplied, where those are being consumed. Right. So it is not that the central government is going to retain the whole money. 50% of that amount is going to be transferred to the state where the goods and services are being supplied. So where the destination is. And with reference to that, we have Article 269A that says amount of IGST is to be appropriated between the central government and state government in the manner fixed by the Parliament. So we now have Article 269A. Article 269A, and this is talking about IGST collected by central government is required to be appropriated between state government and central government. in the manner fixed by Parliament. So I said 50% of the amount of the IGST is required to be transferred to the state where the goods or services are being supplied. Not where from, I'm talking about where to, the destination. So the destination state will have the right to have the portion of IGST collected by the government. And this is further authorizing the government to make provisions for deciding place of supply. Now, place of supply is a complicated issue that is we are going to discuss in the later part. It is not always where from goods are being supplied. It is possible that even if the goods are delivered in the same state, but still as per law that is considered as an interstate transaction. So the place of supply is very, very important, because accordingly the amount, the taxation will be collected, right? So whether IGST or CGST. Now if it is not clear which amount of tax, whether IGST or CGST is payable, or it is or which amount of tax is to be collected and paid, by chance if the wrong tax has been paid, where IGST is payable, by mistake CGST, SGST has been paid, or vice versa, section 77 says you will have to pay the correct tax and then you can apply for the refund. There is no question of adjustment of the taxes wrongly paid. Section 77. Right. So that's why it becomes very, very important to decide which is the place of supply, and accordingly the amount or the nature of tax will be decided. Now here from we move further to Article 279A. That is also very, very important article. Article 279A. This is authorizing the President of India to constitute GST Council, and this council will have Central Minister of Finance, then State Minister of Finance, then ministers of every state. Now this may be a finance minister, this may be a revenue minister, or any other minister nominated by the state. These people are the members of the constitution of the GST Council, and this council is constituted on 15th of September 2016. This has already been constituted, right? Now this council is purely advisory in nature, purely advisory. So this is recommending to the government the role of this council. So I can put a title as role. This is only recommending. Ultimate decision is of the government. First is taxes to be subsumed. Which are the taxes required to be merged? That is the old story, so now there is no question of further repetition. Which are the taxes already merged in GST? Then slabs of tax, the rates of tax, then exemptions. Apportionment of IGST and similar matters. So at number of places we are going to talk about in the entire summary videos that the central government will act only on the recommendation of GST Council. Now the best part is that another amendment has been made in the constitution that says any change in this can be brought in only when it is approved in both the houses of parliament by 2/3 majority. It is not simple to change the constitution of GST Council, right? Now, how the GST Council functions? Two things are important for the functioning of GST. Number one, every decision of the GST Council should be taken in a meeting only. Every decision of GST Council should be in the meeting only. Number two, every decision has to be taken by 3/4 majority of votes. Out of that, central government's votes will be 1/3 and the states will have 2/3 of the total votes. Every resolution in the council has to be approved by 3/4 votes. So when 3/4 of the states have already agreed on something, the question of objection does not arise. So friend, this is chapter 1 of your syllabus GST, right? So this brings us to the end. If you like the video, don't forget to share and inform your friends. Thank you.